Hello and welcome to our weekly market roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your host Daniel, bringing you the highlights and the happenings from around the world. Last week, global markets reflected a tug-of-war between persistent inflation pressures, shifting central bank policies, and varied regional economic developments. Here's a breakdown of the major market movements and economic highlights from the past week, along with an outlook for the week ahead. US stocks reversed some of the prior week's strong gains, with the S&P 500 falling 2.08%, the Nasdaq down 3.14%, and the Russell 2000 declining 4%. Small-cap stocks underperformed, while the financial and energy sectors benefited from optimism around deregulation under the new administration. Healthcare stocks, however, dropped due to concerns over potential policy changes. October's CPI rose by 2.6% year-over-year, driven primarily by housing costs. Retail sales increased 0.4% in October, surpassing expectations and showing continued consumer resilience. Jobless claims reached a 6-month low, indicating a strong labor market. Fed Chair Jerome Powell suggested slowing the pace of rate cuts, dampening expectations for a December reduction. This stance reflects persistent inflation concerns and a cautious approach to monetary easing. The 10-year Treasury yield hit a 5-month high of 4.44%, signaling renewed concerns about inflation even as economic growth remains steady. Bitcoin surged to a record high of $91,000 USD, up 32% from pre-election levels, fueled by expectations of regulatory easing under the new administration. European markets declined for the fourth consecutive week. The Stoxx Europe 600 index fell 0.69%, with France's CAC 40 minus 0.94%, and Germany's DAX minus 0.01%, leading the losses. The UK's FTSE 100 also declined, falling 1.12%, reflecting weak business confidence and inflationary pressures. Eurozone Q3 GDP growth held steady at 0.4%, while 2024 growth is projected at 0.8%. Employment improved slightly, rising 0.2% in Q3. The ECB emphasized that October's rate cut was a precautionary measure aimed at addressing disinflation risks, signaling a wait-and-see approach moving forward. UK growth slowed to 0.1% in Q3, with wage growth at a 2-year low of 4.8%, highlighting weaker consumer spending power. Japanese equities declined, with the Nikkei 225 falling 2.2% and the Topix down 1.1%, amid concerns over potential U.S. tariffs impacting Japanese exports. The yen depreciated to 155 against the dollar as trade policy uncertainties weighed on investor sentiment. The 10-year Japanese government bond yield rose to 1.07%, reflecting expectations of inflationary pressures. Japan's Q3 GDP growth slowed to 0.2%, driven by private consumption, which was supported by recent tax cuts. However, export concerns remain a key challenge. Chinese equities experienced sharp declines, with the Shanghai Composite down 3.52% and the Hang Seng Index falling 6.28%, reflecting weak investor sentiment amid deflation worries and global trade uncertainties. Consumer prices grew 0.3% year-over-year, while factory prices fell 2.9%, signaling persistent deflationary pressures. Retail sales rose 4.8%, the strongest increase since February, driven by improving consumer demand. Industrial production lagged at 5.3%, highlighting weaknesses in China's manufacturing sector. Stimulus measures helped slow home price declines to 0.5% in October. As we look ahead, several major events are set to shape global market movements this week. Investors will scrutinize the Fed's meeting minutes, November 22nd, for clues on future rate cuts, particularly after Powell's comments last week. The latest Eurozone confidence survey, November 21st, will offer insights into consumer sentiment amid ongoing inflationary pressures and growth concerns. October trade figures for Japan, November 20th, will provide an update on export performance amid fears of U.S. tariff policies affecting key sectors. As deflationary pressures persist, China's industrial profits, November 21st, will be key in assessing the health of China's manufacturing sector. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Daniel, and I'll see you next week.